Good evening, everyone. Welcome to the channel. Today I am going to talk about Guidewire Software, Inc. Annual Report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Guidewire Software, Inc. offers a wide range of businesses and services to property and casualty, P&C, insurers worldwide. Some of the key services include policy administration, claims management, and billing functionality through Guidewire Insurance Now pricing management, with Guidewire rating management, reinsurance strategy execution, with Guidewire reinsurance management, customer data management, with Guidewire client data management, insurance product design, and management with Guidewire Advanced Product Designer digital experiences for insurers through Guidewire digital engagement applications, predictive analytics and machine learning capabilities with Guidewire, predict property risk assessment, and management with Guidewire Hazard Hub cyber risk economic modeling, with Guidewire Science Data Storage and Business Intelligence Solutions, with Guidewire Data Hub and Guidewire Info Center. These services are provided through various cloud-based applications, including Guidewire Insurance Suite, Guidewire Insurance Now, and other specialized tools such as Guidewire Rating Management and Guidewire Reinsurance Management. Guidewire Software, Inc. has seen its stock price surge by 49.85% over the past year due to several key factors. The company's consistent beat of earnings expectations, exceeding analyst estimates for revenue and earnings per share, has fueled investor confidence. Additionally, Guidewire's successful transition to a subscription-based cloud model has driven growth, with strong cloud deals and significant agreements with Tier-1 insurers contributing to increased subscription and support revenue. The company's robust annual recurring revenue, ARR, growth, surpassing the $1 billion mark in fiscal year 2025, is also a crucial factor. Analyst revisions and upgrades have further boosted the stock's performance, as financial experts recognize Guidewire's strong financial reports and continued cloud momentum. The company's strategic focus on AI and analytics capabilities has also enhanced its competitive advantage, positioning it for future growth in the property and casualty insurance market. Overall, Guidewire's strong financial performance, accelerated shift to cloud-based solutions, and strategic investments have contributed to its significant stock price increase over the past year. The primary drivers of revenue growth for this company can be attributed to several key factors. Subscription and support revenue has seen significant increases, with a notable jump of $182 million from 2024 to 2025. Cloud arrangements with longer duration terms have also contributed to revenue growth, as well as an increase in deferred revenue balance and remaining performance obligations. In contrast, the APAC region experienced a decline in revenue of 24% during this period. The company's acquisition of Quinti SB ZOO for $27.9 million may also impact revenue. However, without further analysis, it is unclear how these factors will ultimately affect the company's overall revenue growth or decline. Net income and profit margins. A turning point, the company's financial performance underwent significant changes between 2023, 2024, and 2025. Initially, net income decreased from a loss of $111.9 million in 2023 to a loss of $6.1 million in 2024. However, the trend reversed in 2025, with net income increasing substantially to a profit of $69.8 million. Profit margins also experienced fluctuations during this period. The gross profit margin decreased from 59% in 2024 to 51% in 2023, before rebounding to 63% in 2025. Meanwhile, the income loss from operations margin improved from -17% in 2023 to -5% in 2024, and further increased to 3% in 2025. The improvement in net income and profit margins can be attributed to various non-operating items, such as a gain on sale of strategic investments and changes in fair value of strategic investments. These factors contributed significantly to the company's financial turnaround in 2025. Based on the extracted summaries, it can be concluded that the company is indeed generating positive operating cash flow. The majority of the pages 52, 53, 54, 73, and 74, consistently state this fact, with clear and direct language such as, yes, the company is generating positive operating cash flow. These statements outweigh the conflicting information found on pages 69 and 75, which provide alternative explanations for negative operating cash flow. Therefore, it can be confidently stated that the company is generating positive operating cash flow. The company's debt level has undergone significant fluctuations over the past year. Initially, it increased by $300 million on page 40. However, this was followed by a substantial decrease mentioned on page 73, although no specific amount is provided. The issuance of new convertible senior notes in 2025 led to an increase in total principal amount from $400 million to $690 million. Regarding interest expenses, there has been a notable increase of 94% from $6.7 million in 2024 to $13.2 million in 2025. This significant jump is consistent across multiple pages, 57, 81, and 104. The data suggests that the company's debt level and interest expenses have changed significantly over the past year, with a notable increase in both areas. The company's financial performance varied across different segments and regions. On the positive side, the P&C insurance industry and cloud-based products performed well, contributing to the company's growth. International markets also showed significant revenue growth, with customers outside the U.S. generating $431.6 million in 2025. However, some areas underperformed. Term license customers struggled, while the Americas region saw a decline in long-lived assets by $4,749,000 from 2024 to 2025. The EMEA region also experienced a decrease in long-lived assets by $456,000 over the same period. In contrast, the APAC region's long-lived assets increased by $5,791,000, but its revenue and other financial metrics remain unclear. Management is signaling a positive outlook for the company, driven by several key strategies. The focus on growth through acquisitions and investing in new technologies suggests an ambitious expansion plan. Additionally, the emphasis on improving operational efficiency and generating recurring revenue streams indicates a commitment to long-term sustainability. While managing risk remains a priority, particularly with international operations growing overall, management's approach appears to be centered around strategic investments and diversification. The company has made significant financial transactions in the form of acquisitions and divestitures. Two notable acquisitions were made, with Quinti being purchased for $26.9 million in cash. On the other hand, two divestitures were also recorded, including the sale of strategic investments, which resulted in a decrease of $0.9 million. Additionally, the company retired its 2025 convertible senior notes, paying out $354 million to retire $220.9 million of principal amount, and settling another $179.1 million at maturity for $180.2 million. Based on the financial summary, it appears that the company has a history of not paying dividends and does not intend to do so in the future. Additionally, there are no plans for share buybacks, indicating that the company's focus may be on retaining earnings rather than returning value to shareholders through dividends or share repurchases. Supply chain disruptions pose a significant risk. The financial summary highlights several concerns regarding supply chain disruptions that could impact the company's business. Market risks, including service interruptions or failures of third-party providers, have been identified as potential threats, P2. Additionally, there is concern about prolonged disruptions affecting the supply chain or platform P30. Global events such as economic and market volatility, including supply chain issues, have also contributed to the company's business challenges, PP 4152. These risks underscore the need for careful management of supply chains to mitigate potential disruptions. That concludes the financial summary for Guidewire Software, Inc. Feel free to comment below, and I will be happy to answer them when possible.